So I wanted to follow up on my last video where I talk about getting your credit pulled by a mortgage lender when you're shopping for a home, the effects of how many people pull your credit, the time frame, stuff like that. I wanted to follow that up with this video that talks about the benefits of getting your credit pulled early on in the process. So a lot of people have this idea that, you know what, I want to buy a house, but I got this credit card debt that I need to pay off and some stuff that I want to get removed to get my credit score up. And that sounds like a really good way to think about things, right? I mean, in theory, it seems like a prudent way to go about it. But the problem with that is that you're going off of what you think you need to do to get your credit score up. And a lot of you guys that are using apps like Credit Karma or the Experian app to follow instructions on what to get your credit score up, don't even realize that they're using a completely different scoring system than we're using. They're using a FICO 8 and we're using older FICOs in the mortgage industry. So it can be a lot better if you can work with someone, not just anybody, somebody who is going to help you plan for getting your score up in a way that is going to maximize your home buying potential before you go out and find that house. I'll give you an example. So I had somebody who, I kept telling them, hey, look, let me figure out what you need to do to get where you need to be at. And they were like, no, I know I need to get some collections paid off. And they ended up paying off like $3,000 in medical collections. And it did absolutely nothing for their credit. While they had a $54 charge off credit card from 2 years ago on their credit report that my system showed that paying it off will raise their score by over 30 points. And that's what they did. They ended up getting a higher score, but they had to wait another month for it to work. Actually, it was more like a couple weeks, as we can force it once you do it. But the bottom line is that they spent a whole bunch of money in one area when it was a whole nother area that made a huge difference on their credit report. I mean, it was unnecessary. I'm not saying paying off the medical collections were bad, but focus on the stuff that's going to get you where you need to be at first, and then you can go after the stuff that you may want to get cleaned up on your credit later. It's not just for people with bad credit or even negative derogatory remarks. I got a guy right now who's got a 738 credit score, and I had him put $400 on a credit card, and his credit score that sent him over a 740, and it saved $1,100 out of pocket for him on his refinance. I mean, that's a no-brainer. Moral of the story is get with a mortgage lender who is going to help you achieve your goals first before you find the house. When you're thinking about it, hey, I'm thinking I'm going to buy a house. Talk to someone who knows exactly where you need to be at and help you plan to reach that goal, so that by the time you find the house, everything's already taken care of. And it's not just with credit. It can be income and other factors that you may not have any idea affect your mortgage, but it can. And I've had people with perfect credit have problems that need to be fixed, and it is stressful. But if you get that stuff taken care of ahead of time, then once you actually find the house, it's actually a really good experience buying it, and you're not stressed out the whole way. Anyway, that's my 2 cents. If you have any questions, reach out to me. I love talking about this stuff. I'm a mortgage nerd, so I'll talk to you guys later.